You ever wonder why when you place a trade on a 4 hour that it may go up just a little bit, and if you don't take profit, you're going to be underwater in it? And why some rallies seem to be higher than others? Today we're going to deal with Bitcoin, and we're going to explore that through top-down analysis, which is really similar and sometimes interchangeable with multi-time frame analysis because it's almost the same thing. And we'll actually look at both. And we'll discover how the macro trend on the higher time frames actually affect the lower time frames. So stick around and we're going to find out. Okay, so what is multi-time frame analysis or top-down analysis? If you think of this as looking at a digital map, your 3 month and your 1 month is like looking at the global view, but the daily and the 4 hour charts is like looking at a street level view. You need both to trade crypto safely without getting lost in the noise. Okay, as you can see, this little chart is suggesting that the macro anchor, the 3 and 2 month charts, are for the halving and the cycling. The month, I think, plays a part in that as well. But for the structural trend, the 1 month and the weekly chart is pretty good for swing trading, where the macro anchor chart would be for position trading. And you can do some position trading on the 1 month as well. And I recommend getting in there and exploring for yourself. For one, you can't rely on people to do it. For two, it really sinks it in when you look for these yourself and discover them. And then for a more precise entry, you can use the daily or 4 hour. Now, of course, these are for swing trades and long-term trades. All right, so what I did was I drew a red line on the first red candle of a downtrend on the 3 month chart. Keep in mind, it's 3 months for a candle. And a green line on the first green candle of an uptrend. Of course, on the 3 month, these would be considered downtrend and uptrend. Now, one thing that's concerning here, it doesn't happen very often, is that this MACD is crossed bearish. Okay, and I've got the standard 14 moving average. You can play with these the way you want it. And you see when it moved up, there's a good signal about the same time. However, the MACD would have kind of warned you to get out a little bit longer. Are there better ways? Yes. You use your favorite indicator. You do the work. You have to do the work. Now, I'm going to tell you, for me, I've heard about these multi-time frame analysis, top-down analysis, and it really didn't sink home until I did a case study, and then I started doing the replay. Okay, and then it sunk in really deep. Now, we'll start here somewhere around April 1st of 2023 on this bull run. All right, so we got the 3 month. Let's drop it down to the 2 month. Now, you can see on the 2 month how these have changed, right? You would have to move these. And to really get a feel on this, you need to do the replay, which I may do a video on that, and I'll explore that. But you can see where you would have got out 2 months, give or take, ahead of time, would have saved some time, some money by getting out. And then I've got these here. I don't know if I have them all, but here was a gain of 93%. And I believe this is for the month. I did this in advance, so you didn't have to wait. Let's go to the month and find out. Okay, so from here to here, this little gain. Now I'm beginning to think it's the week. So you can see that this gain was 93%. This gain was 74%. This gain was 109%, 48%, 23%, 12%. Now we'll examine these, but you can see that these gains are large, and this is my whole point. When it's in an uptrend from the 3 month start candle, which of course you would have got in earlier using the month, you had these bigger gains. And then down here in the downtrend, you've got 27%. You've got 37%. And these are not on the monthly, I can tell you that. But it still holds true, right? This here was the starting uptrend, 68%. My whole point is, during the 3 month and the 2 month, when this is on an uptrend, the gains are bigger, the gains are safer. Apparently. Now, this isn't financial advice. but this is verifiable. I encourage you to go through your simulator, draw these lines, get intimate with it, get to know it very well. Now on the monthly, MACD still bearish, RSI is low. Now on the weekly chart, you got your first red candle, your first line on the red candle, that actually could be moved. And you might consider here, when the MACD crossed bullish, would have brought you out really close to the top. Not only that, your second signal is when this crossed over the 14, which was right about at the top on the weekly chart. Now, if you want a tippy top, forget it. You're probably not going to get it. And if you want the very bottom, you're probably not going to get it either. Another interesting point I want to say is that during this uptrend, you're going to have all these videos coming out. Why did Bitcoin drop? We're in a bull market. Crypto's over. Man, this went on for 1,000 days. Well, actually, 914 days, give or take. It's like blah, 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 blah. Nothing they say really matters. We're in an uptrend. Then we go back to the weekly, and this is where the trades, there's 109%. Yeah, you may have gotten, that's getting in on time. Of course, you might have got in on the first green candle, and you might have got out here on the MACD cross, or here when the RSI took a dip under the 14. Or use your favorite indicator. Okay, this is about top-down multi-time frame analysis. It's not about which indicator to use. Use the indicator that you like. And then, of course, you go all the way back to the start of it. On the weekly, you could have got in earlier, sure. But you coincide that with the daily. So once you get this panel here, and I'll hit replay just so we can get a clear look. All right, this is on the daily. You got the MACD going above zero. It's bullish. RSI is climbing. You go to the monthly. What does it look like? It crossed the 14. MACD didn't cross bearish yet. You go to the 2 month. Not really a whole lot, except one candle on the 2 month has happened. The smaller time frames do bring the bigger time frames around, but you really can't see it in here. It crossed bearish, yet the next candle's going to be your first green candle. So it is a little slow. I'll give it that. But you cannot deny that during an uptrend, you're going to get plenty of good, solid trades. That's the best time to swing trade or position trade. Now, position trade would be like buying on this cross here, maybe coming down on the monthly, and then selling it on the cross here. So boom. And if you just went to the MACD, I mean, this trade's going to last you somewhere around 884 days. And that's position trading. The advantage is it's fairly safe. Can't blame a man for taking some profit here. You'd leave some in because the MACD is bearish, but these drops can be significant. From the top to the bottom, that's a 32% drop. So yes, take a profit. Don't sit there and wait for a 32% drop before you realize that the bottom's falling out and you should have sold 32% ago. Take some profit. Since we're apparently near the bottom, we're going to use multi-time frame analysis, top-down analysis to examine this area here. Why? Because I want to see what's going on the lower time frames all the way up to the higher time frames which would indicate some type of signal. Now, of course, we got the MACD cross bullish, but my goodness, man, that's like a year late, give or take. I mean, there's 4 candles there, but it would work. Bullish cross to bearish cross certainly would work. But if there's another way, there's another way. But if your way doesn't beat this, do this. Now we'll zoom in. Now we're concentrating on this first green line. Now you can see that this line was, a little bit. I can move it over 2 months. You can get in earlier. And of course, this line here, still, it is a little late getting in because of the 2 month candle. And a little late getting out. When this crossed the 14, there is a little bit of headway to get in there. So we see this happening, and we'll zoom into the month. During the month, my goodness, a month and 2 months right on. Here we go. This crossed the 14, and you can fool around with the length on this the way you want, and use your favorite indicators. You're not stuck to these. It's not a video about indicators. It's a video about top-down and multi-frame analysis. Now, when this crossed bearish, you might have lost a little bit, but if you're on the conservative side, you lost 57% of the first. You lost 57% of the first part of the rally, which is not the end of the world. So you see this happening on the monthly. So we'll go down to the weekly. Okay, on the weekly, you had a heads up that something was happening, and you've got what you call a bullish divergence, both on the RSI and on the MACD. And I'll go ahead and map this out for you. Divergence means that the indicators are going one way and the price is going another. Now, it did cross bearish. Now, that doesn't mean to get in. And you also notice when it crosses the zero, it really takes off. But again, I think that's still about a 50%, loss. And you might nibble in. But if you go in straight away, when this crosses bearish, let's say you buy it at the top, you got a 40% drop before your money takes off. So, and it's also 97 days. So just wait the 3 months and a week, whatever. Be patient, but this is a signal. Cross the bow. Ding, ding, ding. Better pay attention. Okay, and then to drive it home a little more, and this pretty much, brings down. Now, to drive it home even more, you need to do the replay and see what actually happens, because these lines will change mid-candle. This could cross bearish or bullish and then cross back. Okay, so that's something that you have to experience to actually know. The fastest way to do that is through replay, or you can just watch the charts. But that's, every candle's a week. We'll switch to the day, see what the day chart has to say. So the day chart crossed bearish, bullish, right? Not such a bad time. Now, you'll see that this crosses bullish and this crosses the 14, and that you really don't, that's pretty much the bottom. And no, every time this happens, it's not going to be the bottom. But as you can see, locally, we can sit here and get in here, and this is the bottom. Of course, you don't know that at the time, but you might consider nibbling in and then go bottom up analysis, right? You can see that this came in a little bit earlier, right at the bottom, and that also the daily came up after this cross bullish. And if you wanted to wait to cross this, you're probably okay, and we'll go back to the day and see what it says. Okay, so on the daily, basically, if you're waiting for the week, you're going to wait to here. You're not really looking, missing a whole lot. Then we'll go to the monthly. Okay, and you can see that on the monthly, way early, but it is at the bottom. You might nibble in or you might go in, but as this develops, it gets to be more safe and more safe. Go up to the 2 month, and you can see that this actually got in on the red candle. Well, it's because the bottom was in. And then, of course, the 3 month, I'm sure that moved the candle a little bit. Sure, it moved it to the red candle instead of the first green candle. So you can see where the top-down and multi-time frame analysis comes in handy, but you have to practice this. Just don't think you know it and start betting the farm on it. And also, if you're new to it, the minimum buy, I think, is like $10. You might want more in case you lose. You place $20 on something. Yeah, the gains aren't really the best, but this is the practice that you need, because after you learn technical analysis, psychological factor means a lot. That is a hard thing to master yourself. Okay, I definitely had a lot of snags in this video. My computer didn't want to work right, or the editor, or something. Anyway, if you have found value in this, please like, subscribe, and edit. I do plan on doing a video soon about replay and what we learned here on top-down analysis we will use in the replay.